Okay. So, wow, these Tata Steel results are quite something, aren't they? Like 19,040 crore rupees in consolidated EBITDA for 9 months. That's a pretty big number, right?
Yeah, I mean, actually, it's a significant jump. According to the press release, it's a 14% improvement year on year, which shows a solid performance despite, the global economic challenges.
That's true. It also mentioned something about revenues being at 1,62,324 crore rupees for the first 9 months. That's also quite a hefty figure, isn't it?
Exactly. I guess it kind of underscores the scale of their operations and the fact that they managed to maintain an EBITDA margin of 12% across that revenue base shows some resilience, I suppose.
Right. They also mentioned something about capital expenditure, like 3,868 crore rupees in just the last quarter. Where's all that money going?
Well, I think most of it is going towards their expansion plans. Like they've spent, 12,450 crore rupees between April and December. It's probably covering the ramp up of their Kalinganagar plant and their new continuous annealing line.
Oh, right, the Kalinganagar plant. It said that the new blast furnace is operating at around 8,500 tons per day. That's pretty good, isn't it?
Well, I mean, it's a good start. And, it's still ramping up to its full rated capacity, which should further boost production in the coming quarters.
Okay, and what about the debt? I saw that number too, net debt of 85,800 crore rupees. Is that a concern?
Well, it's definitely a large number, but their liquidity position remains strong with 28,219 crore rupees, including 13,119 crore rupees in cash equivalents. It's like having a safety net, right?
Right, and India seems to be doing quite well with an EBITDA margin of 24% and deliveries up 8% yo-yo. That's where they're making a lot of their money, right?
Exactly. You see, the Indian market is their powerhouse with revenues at 32,930 crore rupees. And that strong EBITDA margin shows their domestic operations are very robust. It's like a well oiled machine.
Yeah, and it also mentioned something about the UK operation struggling a bit, EBITDA loss of 67 million pounds and deliveries down. What's happening there?
Well, that's down to subdued demand and the ongoing transition to low carbon steel making. It's like they're restructuring, and that's costing them a bit at the moment.
And the Netherlands, that's also not doing great. They have zero EBITDA for the quarter, right?
Yeah. The Netherlands is also facing challenges due to low steel prices, and that's impacted the company's profitability there. They're working on sustainable operations there.
Okay, so mixed bag then, I guess. India's doing great, but Europe is facing some tough conditions.
I mean, it's a pretty accurate summary. India is leading the charge while the European operations are, undergoing significant changes, which is impacting their performance.
Now let's move on to the auditor's report. What did that say? It was a review of the consolidated unaudited results, right?
Right. So basically, the auditors did a review and they concluded that the results were prepared in accordance with the accounting standards and, didn't have any significant issues and stuff.
So no red flags there. That's good. It mentioned something about schemes of amalgamation. What's that all about?
Well, that's because they've merged with a few of their subsidiaries like Indian Steel and Wire Products Limited and Angle Energy Limited. It's like combining different parts of a business to streamline operations.
Ah, okay. It's kind of like, reorganizing the company. I saw a bunch of figures on those schemes like net profits and revenues. What does all that mean?
Well, those figures show how these mergers have impacted their overall financial statements. They kind of give a comparison after integrating the financials of the merged entities.
Right, got it. It's like if you add all the ingredients of a new recipe, that's the sum. Now, what about those emphasis of matter notes? Are they important?
Yes, they are important. I mean, those notes are there to highlight some specific issues like, the accounting for those mergers. It's just something that readers should be aware of.
Okay, that makes sense. So the audit report gives a thumbs up overall then, right?
Yes, I mean, the audit report for the most part is positive. It confirms that, the financial results are presented fairly according to relevant regulations and standards.
Now, let's talk about the investor presentation. what's the main takeaway,
Well, the presentation emphasizes Tata Steel's commitment to sustainability, digital transformation, and growth in India. It's like outlining their future roadmap, right?
And sustainability seems to be a big focus for them with the net zero target by 2045, right?
Exactly. You see, they are really pushing for greener steelmaking with like different initiatives in each region to reduce emissions and conserve resources.
So they are thinking long term, not just about the next quarter, then, I guess.
Yeah, they seem to be looking at it strategically. They're looking beyond just profits, and are focused on long term growth and sustainability. It's like planting a tree, for the future.
Okay, and what about digital transformation? How are they using that in their operations?
Oh, they are using AI and other digital tools to improve efficiency and enhance decision making across the business to achieve manufacturing excellence. It's like giving their operations a digital brain boost.
So they are also focusing on being cost competitive, especially with the restructuring in the UK, right?
Absolutely. They're aiming to become a global cost leader through operational excellence and supply chain optimization. Like they're trying to get the best bang for their buck.
Okay. And how are they working on the diversity and inclusion front? Did they mention that?
Yes, actually, they mentioned operationalizing an all women shift at one of their mines. It's, a really important step towards building a more inclusive work environment. And they're building talent pipelines as well.
That's great to hear. It's, important for companies to focus on such aspects.
Yes, definitely. It's not just about the numbers, it's also about creating a more inclusive and sustainable future for everyone.
Okay, let's see. The presentation mentioned a target of net debt to EBITDA ratio. What's that about?
Well, they're targeting a net debt to EBITDA ratio of less than 2.5 to 3.0x. It's a metric to ensure they're not, taking on too much debt and they're managing their balance sheet effectively.
Right. It's about managing their finances in a way that ensures returns, I suppose. Right.
Exactly. It's like making sure the company is financially healthy. They're also, focused on improving their capital allocation to drive returns.
Now, I see that the presentation was meant for analysts and investors. What would they want to hear from all of this?
Well, investors would likely want to hear about the company's strong performance in India. It's a solid driver of growth. And, their strategic plans to navigate the challenges in Europe and overall their commitment to long-term value creation.
Right. They're probably looking for good returns and sustainable growth.
Yes, they are looking for that, as well as the assurance that the company is well positioned for the future. Now, if you like this kind of content, remember to like, share, and subscribe to the channel.
Okay, so what do you think about all this then? Anything surprising or any haha moments for you? I mean,
Well, I think the scale of their operations is quite impressive. And the fact that, despite facing headwinds in Europe, they're still managing to deliver positive results, especially in India. It's like they're navigating through a complex situation and are still holding their own.
yeah, that makes sense. The focus on sustainability and digital transformation is also quite promising.
Absolutely. It shows they're not just reacting to the present, but are proactively preparing for the future. It's, like they're building a future proof business.
I guess so. And it's clear India is a very big market for them. And it seems they are set to grow further.
Yes, they are leveraging the high growth opportunity with capacity expansions and focus on downstream value additions. It's like they're building a strong foundation for future growth in India.
Now, I see the disclaimer is there advising investors to consult certified experts.
Yes, always a good practice to, get advice before making any investment decisions.
Okay, so any final thoughts? What's the overall outlook?
Well, I think overall, Tata Steel seems to be on a good path despite some near term challenges. Their focus on India, sustainability, and technology is a smart play. It's, like they're trying to balance short term goals with long term vision.
So a mixed bag for now, but lots of potential for the future, right?
Yeah, it seems that way. I think it will be interesting to see how they navigate the complexities and continue to grow. It's going to be a fascinating journey, and that's all for today.